All right. Yeah, screen share. Yeah. There we go. All right. Let's do this. All right, let's run this thing. All right. Thanks, man. Bye. All right, Nick, if you can hear me, good morning. First stream here for Bettertradr. So we're at the London close here. So just taking a look at the heat map to kind of see what's going on. So this is kind of a cool little run through at the beginning, just to see what's moving. Usually at the end of London close, most of the moves have kind of taken place, and this is kind of a cool opportunity to counter trend or catch the retracement on a trade here. So this is obviously only one part of it. So the next thing I'd like to do is just take a look at the markets and see what's going on fundamentally. And let's take a look. Talking Forex is a great resource here that kind of gives you the headlines on what's going on. And let's take a look, and then we'll see if we have something tradable here. So this daily FX wrap is kind of a good opportunity to pair a weak pair with a good pair, because technicals are part of the picture, but so are fundamentals. So you have to pair both together to have the best opportunity and the best edge. So pound, notwithstanding the dollar's ongoing and overriding bid, the pound appears primed to end the last day of the month, quarter, and financial year with a flourish, as cable proclaims 124 handle, and the euro pound reverses towards 88 from around 89.68 to build on Monday's gains through a key fib retracement just under 8,900. So nothing stands out in terms of positive or supportive sterling factors. So that's the interesting there. So it's just technical. So this is the end of the month. It's March 31st. So there's kind of repurposing here, especially at London. Cross flows may be impacting alongside the latest Fed repo facility used to provide US dollar liquidity. So the Fed's trying to keep the dollar fairly low here. They don't want a spike, which the dollar at the end of the day is the world's safe haven currency right now. Through the FEMA is designed for all foreign central banks and international monetary institutions to tap swap line. So there's really nothing strong about the pound. So actually, that's a pair. That's a currency I'd probably like to fade right now, if we can find something nice to trade it with. Probably wouldn't be the dollar though, because the dollar is being held down by the Fed, right? Buck failed to glean additional impetus from less COVID-19 contagion than anticipated in the Chicago PMI, and consumer confidence is holding up better than feared. But the Fed measures on easing credit and funding strains, so that's going to keep the dollar fairly weak right now. I don't really trade the knock of the SEC. Yen back above 108. Loonie pairing losses from early 1 to 43.50. Kiwi faces stiff headwinds due to antipody and neighbor hanging on a bit more of its post-Chinese PMI relief, but both well down overnight peaks. Franc never really got any purchase from better than expected Swiss retail sales and remains close to 96.50. So that kind of tells me that maybe the SNB are keeping the Swiss franc down a bit as well, because obviously the euro is not very strong right now. Not been able to claim 110 after benign Eurozone CPI and still rising coronavirus cases in both Spain and Italy, respectively. So, really the ideal here is, what would be strong, what would be weak, and then do the technicals match something here at London close to trade. I would like to short, the pound. That would be a good one to do, and maybe like the pound yen, or even like a pound CAD. But the CAD's, there's nothing really positive on the CAD. So I'd probably look at a pound yen and see what we have here. So let's take a look. So London close, I find, is a good time for me, just due to the fact that most of the volatility is kind of slowed down a bit, and that gives you time to digest what's going on right now, and also set up your trade without too much volatility, because a lot of time you'll get whipsawed at the U.S. Open, especially here, because you've got so much money going in and out. So you can see it's right at this most traded level here at 133.75. So actually, I'd probably be interested if this thing actually breaks here. You can see it's retested it twice and kind of bounced up, but it's kind of losing its ability to keep going up here. So I would say if it breaks this, I'd probably look for it to come back up and then short it from there. But right now, it's kind of a wait and see mode. I mean, it's right at the figure at 134. It could still go either way. And once again, this most traded level here, based on the volume analysis, is kind of held. So we'll kind of wait and see what goes on here. So we'll keep this going up here. But it's interesting right now. With the end of the month here on the rebalancing, you can kind of see what the funds are planning for the next month here. So, a lot of dollars, a lot of dollar weakness right now, with the Fed basically giving unlimited QE until we get through this here. I don't know where you guys are at and what's going on in your neck of the woods and countries, but here in the U.S., I mean, states are shutting down. Here in Hawaii, we're basically on a curfew and stay-at-home order until the end of April. So, I don't know about you guys, but I'm bored as heck here. But we can still go to the beach, so I have gone to the beach the last couple days. But that's pretty much the only thing you can do. I did hear in Virginia, they are curfewing and not allowing people to go swimming at the beach. So, you literally have to stay in your home. And I think I saw something in New York saying that they were going to give you 2 weeks in jail if they caught you outside, something crazy. I mean, you can see here with COVID cases, I mean, the death toll rises to 1,550. So people are definitely dying right now. That's not good. So, the economy is pretty much at a standstill. And that's what, that kind of gives me more credence to this thing, because there's really nothing good, no good news right now for the UK. I mean, they are, it's pretty much a bloodbath out there. So I'm going to the 5-minute chart here. I'm really keeping an eye on this level. Like I said, if it breaks, we're going to do a trade, and we'll probably throw the stop maybe about 20 pips higher than this, because sometimes they'll, the big players will spike it up here to get more liquidity because they know stops are right here, and then they'll send it in the direction. So this thing looks like it's going to break down here. One little cool way to keep an eye on multiple currencies is just look at this area right here. You can see everything. So let's take a look here. We got the 133.87. So it's pretty much spot on, and our level is 133.79. We'll see if it breaks it. So there's really no other pairs I'd like to trade here. I'm really honing in on this because I think this will go down. This could be a nice little move for us. Yesterday, Nick and I were talking here, and I did take on a Swiss franc yen long. that was a really nice bounce, and I got in, I believe, at 112.44, and towards the end of London close session, and I targeted 112.99. So let me show you guys kind of what happened on that yesterday. It was a good trade. It hit full profit. So while we're waiting for this. Actually, you know what? Let's keep this open. We will go. Let's do 2. That way we can keep an eye on our possible trade here. It's always good to kind of go back into your trades and see, what works, what didn't work. So we are looking at. So the end of the day was here. So basically, when it spiked down into this area, I got in. There was actually a pretty solid support level at 112.30, and you can kind of see it never really hit it. So it bounced, and then it kind of stalled here again. So I got in right around here, I believe it was, at 44. As you could kind of see some of the wicks starting here. So I thought it was actually going to stop right here. It spiked down a little bit further, but the line held. My stop was below the 112.30. So what I like to do is I'll put a stop maybe 20 to 25 pips away and kind of watch price action and set a alert if it hits the level I'm looking at. And I want to see if it closes below that level instead of spikes below that level. Because like I said, some of the big traders out there, there's a lot, they will spike it down to get liquidity and get those stops and then take it in the direction. So whatever my time frame is that I'm trading in, I'd like to see if it actually closes below that. You can usually tell based on the price action of the candlestick if there's a battle going on or if that thing is just dropping like a rock. So if it hits my price alert, I'll watch it and see what it's doing. And you can kind of see the battle there. You look at the volume. Is the volume really spiking up? And how is it reacting to that? So, if I don't really like the look of it, I'll actually just click out. So it'll be a mental stop, really. Because it's already at that level. So like I said, if it goes too far below the level and you can really see there's some strength, I'll click out before it hits that advanced stop. But at least you have a stop in place in case something happens, some kind of crazy announcement, which has happened in the markets before, as you all know. So that's kind of what I did here. And I targeted, there was a volume cluster here at around 113 from the past. So I went 1 pip below at 112.99. And you can see as it went into Asia here, it just spiked up and hit that target. So that was a really nice trade here. So that was kind of a good move for yesterday. And, we're hoping this kind of goes through today. This one's a little different because I'm actually looking for the level to be broken as opposed to hold. I'm not interested in going long. And this is why you want to have that fundamental picture, because you can't just trade. Well, there's varying opinions about it, but I don't believe you can just trade the technicals, because the technicals are driven by fundamentals, and ultimately price action dictates everything. But having an idea of why a pair is trading a certain way or going in a direction is important, because if you're making an investment, which is what you're doing when you're trading, having that fundamental outlook just gives you more confidence when the technical picture looks favorable. So you kind of want to pair everything together here, and that's how I do it. And I know a lot of successful traders, that's how they do it as well here. So we're going to wait about 10 more minutes. That's when the London close is officially over. And maybe keep an eye on this for a little bit later. But, it doesn't look like it's moving right now. But, yeah, you can even see the wick here. I think the pressure's building for a downward turn. So, yeah, we'll see what happens. Forex Live is something I just try to keep an eye on during this time. See if there's anything new going on. So here's an interesting article. Here's what's driving the Canadian dollar higher right now. I mean, let's see. Two big government announcements. So this is exactly why you want to look at this thing. So let's say London close. You're thinking, okay, well, Canadian dollar's seen some strength, but we know it's going to bounce. Well, if there's two huge government announcements, it's not going to bounce, right? And there's a reason the price action's moving here. So Canadian oil and gas today, two big government announcements. State of play in oil is very interesting. Canadian crude is landlocked and is trading around $5 a barrel right now. Holy crap, that's horrible. That is a massive short-term problem. Long-term, TC Energy sanctioned the infamous Keystone XL pipeline with the help of the Alberta government. Construction will begin right away, and when it goes into service 2023, it'll be capable of carrying 830 to the U.S. Gulf Coast, improving economics in Canada. U.S. shale is imploding with few prospects for salvation. So the projections have been proven wrong last year. Almost everyone in shale lost money at $55 on oil. Interesting. Schism between U.S. and Canadian oil. This is an operating cost of $11.49 a barrel. Wow. Annual operating cost of $11.49 a barrel. That's nothing. So if this thing recovers, I mean, even right now at $20, it's still fine. North America, 2 to 3 years. So this is more of a long-term outlook. So you're going to see a little bit of strength, but I mean, we're talking 2-3 years from now. So I don't know if this is something that I would bet on over the next month, because right now, most of the banks are forecasting, I think 147, 148, and the Bank of Canada is not going to, doesn't want to hold their currency up. So I don't think there's going to be any move substantially higher for the Canadian dollar until this coronavirus thing gets figured out. All right, well, this thing's kind of holding here. So these guys are defending their position at 133.79. You can see this drop right here, and it held again for the third time, but it's weakening. These guys are going to give up on their position. So let's see if this thing breaks right here, and then I want to catch it on a spike up, and that's how we'll trade this thing. And in terms of targets, I mean, you could target this first level here, maybe at the bottoms at 133.26, but I think it'll probably go down into here and spike, because there's going to be some stops right here, because what a lot of traders are doing is they're doing a retracement right here and getting in, but you can see that it ain't going nowhere. So I would probably take target at like 133.17. So you're looking at, let's set it up. Let's set it up, and then we'll call it a day here. You can see it. Here it comes. Let's assume it's going to go right there. And yeah. So here's the thing: is it even worth our while at that spike? Not really. So we're looking at a 0.69 to 1 here. So what we might want to do is, if it spikes down, spikes up again, we'll get in and maybe target something above this high. So get it to like maybe here. We're going to have to get something a little bit further down, though, to make it worth our while. Let's see, so I want to look at, where's the last volume, because that'll tell me, hey, you know what, there's some volume down right here. So maybe at we can get it at like the figure 133. Let's see if we can move it down there. Does it even get to, you know what? I'd feel comfortable taking that trade. But you can see it spiked up again, so it it's bouncing off this level right here. So I don't know if it's going to hit. And usually I don't like to trade it too late after London, so maybe another hour if it hits. It's not a very good trade in terms of reward to risk, but I think it could be profitable. We'll see. So we'll kind of leave it at that, guys. If you need anything else, hit me up, and hopefully this trade plays out, and we'll talk about it tomorrow. All right. Have a great day, and I'll catch y'all later.